talk about the way that founders, which oftentimes are content creators, are able to earn millions while paying zero tax. This is going to be done through something that we call in Canada, the lifetime capital gains exemption, and in the States, qualified small business shares. All right. I think IRC 1202. I'm not really good with my section numbers, or I don't memorize them. I memorize the actual importance and substance, not the numbers. But the key here is these exemptions allow content creators who are founders to completely wipe out tax on a capital gain. In Canada, a content creator can build a business from the ground up. They are able to sell that business for, let's say, 2 million. Right? 2 million is a number that will fall within the exemption as a capital gain. The taxable capital gain will be 50% of that. So $1 million. That million will have no tax applied to it because the lifetime capital gains exemption on qualified small business shares of a Canadian corporation are exempt from tax up to 1.2 million as of 2025. In the States, the QSBS deduction exemption goes up to 15 million. 15 million or 10 times your adjusted basis. That second part is a little too complicated for social media. So if you guys want to know about it, leave it in the comments. I'll make a second video. But let's say 15 million is the cap. You could sell a company for up to 15 million. The capital gains are a little bit different in the States. So 100% inclusion. So if you get a capital gain of 2 million, kind of like in our Canadian example, you would add that 2 million to your taxable income. But however, because you're selling qualified small business shares and you can take that exemption, you would also incur no tax on that sale. And that's how you have founders who are able to exit and look to exit, right? You have to start thinking about tax policy. If you watch a lot of my videos over this past week, we talk a lot about how tax policy incentivizes behaviors. You have now founders who are incentivized to build businesses and exit in one way or another to literally avoid tax. And the pipeline, the creator tax pipeline is literally you use your personal brand, build a business, use tax deductions and entity structures while you're building that business to pay little to no tax. And then once the valuation is high enough and you want to exit, you sell while making the capital gains exempt through the lifetime capital gains exemption in Canada or QSBS in the States. That's literally the creator tax pipeline. That's the way that you'll find founders and content creators earn millions while paying $0 in taxes.